Today's top three things. Number one, commodities. Number two, the 10-year bond yield. Number three, the S&P 500. So first on commodities, if you didn't know, another three-year low yesterday. Again, a little poetry from the mucker there, but the reality is that commodity deflation continues to be pervasive, down 1.3% yesterday on the CRB index. That puts it down 6.5% for the year to date and down almost 32% since this started at the end of June of last year. So again, yes, Mr. Macro Market continues to be concerned about deflation, and yes, you should too. Point number two, 10-year bond yield hits a new high in bond terms yesterday, new low for yields. Again, I think we ticked down to 1.71. Do I have 1.70? Not in the risk range today. I'll keep you at 171. Now, on a bad GDP report tomorrow, you could easily get below 170. Don't forget that after 171, there's no support to 152. Again, we'd reiterate the call here. It's very straightforward. The Fed is starting to agree with it in as much as global macro markets have now for the last 3 to 6 months, which is the best trade in global macro, or at least the best way to reflect upon global growth slowing and inflation becoming deflation in a phase transition, is indeed being long the long bond. The long bond in TLT terms is up 9% for the year to date, with the S&P 500 almost down 3%. That is indeed the time stance score. Now, hitting on the S&P 500 finally, again, down 2.7% in 2 days, has been down for the 3 of the last 4 days. Can they get it up on anything other than Apple reporting every day and or a European central plan? I don't know. Don't forget that the S&P 500 has only had one up week in 2015, one, and that came on the European Central Plan. If you go down the line and you start to see Qualcomm and Alibaba and everything else, I mean, at some point, you have to acknowledge gravity here. Now, gravity can be deflation, it can be jobs growth, it can be earnings, and all three of those things in rate of change terms are going the wrong way. You have no immediate term trade support to 1983 in the S&P 500, and if they bounce them to 2022 is where I have resistance. So those are your top three things.